got loads to digest today. The chairman of the Fed, Jerome Powell, has just announced that he doesn't think the US is heading into a recession. 75 basis point rate hike done. Markets rallying. Bitcoin up 7.64%. S&P now over 400. What is going on? And what is Jerome saying? We're going to break down everything that was said. If you guys missed the 1.5 hours live stream, which nearly put us to sleep at the FOMC meeting as Jerome Powell was master dodger of every single good question, then you're in the right place. I'm going to summarize everything for you guys in a short video here. Feel free to watch it in 1.5 times speed because we've had a lot of content today, and I understand if you're all drained out. But in essence, we've seen the yellow line here was when the 75 basis point interest rate was hiked. Left side is Bitcoin. I'm showing you on the right hand side is your S&P, and you saw the move happen immediately once that decision was made. You saw Bitcoin immediately start to move. The S&P was a little bit more tentative, and then when Jerome Powell started speaking, which is this green line here, the markets responding, started moving up. Bitcoin touching as high here as 23,100, and I'm going to come onto some of those key levels very shortly at the end of this video for what we need to watch out for and where this move could come from. So make sure you hit up the like button. Don't forget to subscribe. As always, guys, if you appreciate this type of content, timely, in a manner, when you need it, and with what you need, so let me know in the comments that you appreciate this type of content. So what was said, right? So 75 basis points, the market already anticipated that, right? That is why we're seeing the green. We didn't get the 100 basis point rug pull. Therefore, market is okay to rally. Now, you're not going to get a crazy rally because the whole premise behind this is he hasn't paused interest rate hikes. He didn't give us a clue of when we're going to pause. He's never told us we're going to have 50 basis points rate hike next one. He never gave us any clues around that. He says the labor market continues to be strong, and he seems to be hanging his hat on this very labor market. Now, obviously, there's a bunch of politics at play as well. You saw a bunch of sidestepping of key questions. All the right questions were put to him, but even for Jerome Powell standards, I've never seen him dodge so many blatant questions. I mean, he didn't want to even give the definition of what a recession is. Like up to a couple of days ago, tell me if you know otherwise, but I didn't think the definition of a recession was in question. 2 consecutive quarters of negative growth. But suddenly now he's saying, and he came out and said the words, I do not think the US is in a recession. So we're not in a recession according to Jerome Powell. He says too many areas are performing, haven't seen the data, and we'll have to see what it says. And then he caveated that by saying generally GDP figures get revised anyway. So he goes, I've not seen the GDP figure from tomorrow, but I don't think we're in a recession. And by the way, when the figure comes out, just take it with a pinch of salt, will ya? Because it's going to get revised anyway. So that's your chairman of the Fed over in the US. I can't talk. We've not got much better politicians here in the UK. But nonetheless, that's what we've got. And the market is rallying right now. But I want you guys to take this with a pinch of salt and caveat this, because the analogy I would use is this is like a spoiled child who every time he goes to his parents are given a sweet and the kid is really happy. But after a certain point, the kid's going to go, hang on, my parents don't love me. They don't care about me. Like, they're going to send me to the hospital, right? This is not good for me. So yes, the market is enjoying this short-term relief that he's only doing 75 basis points. But longer term, the market needs him to get tough. They want him to really take control of the situation. But Jerome Powell's not doing that. Every meeting he's pandering. Every meeting, after every single meeting we've seen this run up. And it's only after the market digests the data a couple of days later, we start to fall. So Jerome Powell is like the master pumper of the stock market. Every time he announces interest rate hike and every time he speaks, we're seeing this pump. But now we got to get ready for the next dump to ensue over the next few days. Important for me to add, we also are going to get Meta and Ford producing earnings after the close as well. I've not got them at the time of recording this video, so we'll look out for that. I'll tweet updates accordingly for those. Pfizer and MasterCard tomorrow before the open, and then the big ones. The GDP figure tomorrow, plus Amazon, Apple, Roku, and Intel sharing earnings tomorrow. So loads of data still here for everybody to digest. On the Bitcoin chart, what I'm seeing here is this pattern, right? We've got the breakout again from this channel, which is very, very interesting. We've got a higher low. Let me just get zoomed in here so I can show you guys this very carefully. We've got a higher low, right? This was our low. We've got a higher low, which is great, but we're not back in the game until we post our higher high. And this is really important. We need to break through 24 and post some sort of a higher high. That's all you need to keep this uptrend going. If we don't get the higher high, I'm warning of this now. Remember, if we don't get this higher high, you're creating another head and shoulders pattern, right? An even bigger one this time, where you're getting this type of effect happen. And that's your head and shoulders pattern, which would be a bearish situation here. So you need this move over the next hours and days to get you above 24. And if you get the close above 24, remember I said that was a critical level. That is where the bears rejected us last week, and we need to see, can we get that daily close above 24? I'm going to show you why once more time. Let me bring out the EMA ribbon. Let me zoom into this key level here. And as you will see, this is where we got rejected at 24. So if we can get above 24, close our daily candle above 24 over today or tomorrow, then we can get bullish. So until that point, I'm not bullish just yet. I'm not buying into the same day pump at the FOMC. I think the markets are going to be happy right now, but I think longer term, they might be slightly disappointed that Jerome Powell is not doing what's necessary to take control of this situation. And that's a concerning thing. Jerome Powell continued to reiterate the normal things. He wants to bring inflation down to 2%, and he wants to see significant improvement in inflation. Then they can talk about pivoting. Now, really important to remember, if you look at previous cycles, we've not seen markets bottom until the exact day when the Fed U-turn. So some people argue that the markets will bottom before the Fed U-turn, but what the evidence shows, when you look at previous cycles, even going back to 89, you will see that the bottom happens when the Fed actually U-turns. So when does the Fed actually go, hang on a second, we've been front-loading these rate hikes, we've done 75 basis points, we're going to call it down. Now, he didn't roll out an even bigger rate hike at the next one. We can see now, if we look at the Fed rate monitor tool, the market's only pricing in 50 basis points for the next meeting. So you can see here, 50 basis points, they priced in all but 90%, and we'll see this change between now and September the 21st, which is our next FOMC meeting, okay? So that's going to be important for us, is what do we get that next rate hike? Are we going to see that slow down? Is it going to cool off to 50 basis points and then 25 and maybe even get a pause eventually? Or is he going to come out with 1 basis point and really get aggressive? That's obviously going to depend on a bunch of data that comes out between now and that September 21 figure. Does inflation come down? Do companies produce good earnings? What does the labor market look like? Is it continuing to tighten? And that's the balancing act he has to play. A few other interesting sound bites from Jerome Powell. He says, I don't think I would do that again. I don't think I would keep policy so accommodative again, as inflation was already picking up as we did in 2021. Crazy. He still said he's trying for a soft landing. So this is very interesting. And he also refused to comment on the definition of recession. I mean, that's just insane. And definitely there's a lot of politics going on with midterms coming up. We know that, I mean, this is fact, right? They've got to play this game very carefully. Joe Biden doesn't want to be known as the president to throw us officially into a recession, which could trigger a global recession if the US falls into a recession. And that's why they're definitely being coy with some of these definitions here. He was also asked about his balance sheet shrinkage. He said it's working well. He said they've tapered up to it, and in September we will be at full strength and the market has accepted it. And he said it could take 2 to 2.5 years to get to his target range in terms of tapering these purchases. A few other interesting things is, you know, he continues to say he hasn't seen the GDP figure. I don't know how much I believe about that. When he was asked about recession, he says we need growth to slow down, and growth will slow down. We're seeing tighter monetary policy. We'll see softening in labor market conditions, and he continues to be focused on inflation, and more importantly, core inflation. So there you go, guys. That's what we're seeing in the markets as a quick update. Markets are, you know, they're rallying because he said all the things which we wanted him to say. But I just want to leave this video by reminding you guys of this very chart. And this very chart I share with you were the last 3 FOMC meetings where intraday you saw these runs on these green candles on the day, and then you see big moves extended to the downside in the weeks following. And that is what I want to be cautious of. If we get the close above 24 and the market's actually trying to rally, fine. We'll take that with a pinch of salt, and we'll try to see, can we get a relief rally into 30 and what causes this situation to be different. But at the moment, we have to assume we're going to follow the same pattern that we have been following, right? Unless significant data comes out. And by significant data, I mean, do we not go into a recession tomorrow? I mean, do we have positive growth showing tomorrow in the GDP figure? Do we see companies coming out continuing to show us good earnings outlooks and projections going forward? If we can see those things and we can see consumer sentiment start to come back, then that could say, okay, maybe we are due now for a nice relief rally. But otherwise, I can't help but avoid seeing further downside here, and this just being a brief pump. Okay, hope you guys enjoyed this video. Hope you appreciate this summary of what was just said, and Jerome Powell officially saying we are not in a recession, so we're all good, guys. We don't need to worry about tomorrow. Jerome Powell has told us we don't need to check the GDP figure tomorrow. We know we're not in a recession, and all is fine and dandy, as we like to say here in the UK. Guys, smash the like button. Don't forget to subscribe. As always, if you want to check out my other videos, do so here. Check out the links in the description to BYBIT and BitGet if you guys want to trade. Those are affiliate links, so they do support the channel. If you don't want to support me, don't click them. Thanks for watching, guys, and I'll see you in the next one.